Looking to grow your wealth in Singapore in 2025? In today's video, I'm sharing my top stock picks for April. From growth stocks to dividend payers, whether you are a beginner or a seasoned investor, this pick will help you make informed decisions for your portfolio. And hey, if you are new to the channel, hit that subscribe button. I bring you fresh finance content every week to help you invest smarter in Singapore. Before we get into the stocks, let's set the stage for April 2025. The Singapore market is in a fascinating place right now. The economy is showing resilience, and while global market face uncertainty, certain sectors are positioning themselves for growth, particularly finance, tech, and real estate investment trusts (REITs). When we talk about stocks in Singapore, the first thing that usually comes to mind is dividend stocks. Why? Well, in Singapore, dividends are tax-free for individual investors. This is a huge plus because it means any dividends you receive from stock, you get to keep the full amount without paying tax. This makes dividend stocks a great way to earn passive income, especially if you are looking for a stable stream of income. Now, compare this to places like the US, where dividends are taxed, and you will see why Singapore tax policy on dividends is so attractive. In the United States, for example, you have to pay taxes on the dividend you earn, which means you are getting lesser in your pocket. So in Singapore, with the tax-free dividend advantage, investing in dividend stock become a very smart choice if you want to grow your wealth without worrying about extra tax bills. So let's dive into the best stock to buy in Singapore this month, starting with one of the strongest bank in the country. Stock 1, DBS Group Holding. So for our first pick, we have DBS Bank, and if you are following the market, you will know this one is a big player. Right now, it's trading at about 43.3, and DBS continues to be a top choice for investors looking for stable and dividends. Why DBS? First, the bank Q1 earnings are looking solid. Even with all the changes happening with global interest rate, DBS has managed to maintain strong profit margin. This is a good sign that they know how to navigate challenges and still come out on top. Second, the 5.13% dividend yield is pretty attractive. This means DBS is paying out a decent amount of cash to its shareholder, which is great for those of us looking for a steady long-term return. Lastly, DBS is one of the most digital advanced bank in the region, positioning itself as a leader in the rapidly growing fintech space. This gives them an edge as more people shift towards digital banking and online services. So if you are looking for a safe, dividend-paying stock in Singapore, DBS is definitely a blue chip favorite that is hard to ignore. Let's also take a closer look at how DBS, OCBC, and UOB stack up against each other in the Singapore banking scene. Now, all three are pretty strong players in the market, but there are some key differences that investors should keep in mind. DBS, for example, has always been the market leader here. It's known for its strong financial, solid digital presence, and high dividend yield, around 5%. That's pretty attractive for anyone looking to earn some passive income. Plus, DBS is leading the way when it comes to fintech innovation, so it's in a great position for long-term growth. OCBC, on the other hand, has a slightly different strategy. They put a big focus on wealth management and have been expanding their presence across the region. While their dividend yield is a bit lower than DBS at around 4 to 4.5 or up to 5, it's quite solid. What stands out with OCBC is their strong focus on private banking and insurance. So if you are looking to diversify into this area, OCBC could be a good pick. Then we have UOB, which is also a solid choice for investor. UOB tend to be a bit more conservative compared to DBS, with a more traditional banking model. While they are catching up with the digital trend, they are not quite at the level of DBS just yet. Their dividend yield is similar to OCBC, around 4 to 5 and is still a reliable dividend stock. But if you are after cutting edge fintech, DBS might be a better fit for you. Now, when you compare their market capitalization, DBS is definitely the largest of the three. So, in a nutshell, if you are looking for high dividend yield and strong digital growth, DBS is your best bet. If you are interested in wealth management and personal banking, then OCBC might be one for you. And if you are after a more traditional banking stock with steady returns, UOB is still a solid choice. Stock number 2, Mapletree Industrial Trust. Next, we got Mapletree Industrial Trust. If you are someone who loves steady passive income, this one is for you. With a solid 6.5% dividend yield, Mapletree Industrial Trust is a fantastic choice if you are looking to generate income through real estate and data center. Why consider Mapletree Industrial Trust? First off, Mapletree Industrial Trust has a strong focus on data center, which is one of the most resilient sector in commercial real estate right now. With the growing demand for data storage, especially in the digital age, this sector is showing no sign of slowing down. Mapletree Industrial Trust portfolio is well diversified with a mix of high-tech industrial property not only in Singapore but also in the United States. This international exposure helps spread out the risk while tapping into global growth opportunity. In fact, Mapletree Industrial Trust has recently acquired more US-based assets, making the most of the rising global demand for data storage. So if you are looking for a stable income generating REITs that still have room for growth, Mapletree Industrial Trust is a strong pick, especially if you are keen on gaining exposure to the tech and data sector. With its focus on future-proof assets like data center, Mapletree Industrial Trust offer a great combination of stability and potential for long-term growth. Now moving on to the third stock. Stock number 3, Parkway Life REITs. What makes Parkway Life REITs such an attractive option? Well, first up, let's talk about what they do. Parkway Life REITs own a portfolio of healthcare property like hospital, nursing homes, and medical facilities in Singapore, Japan, and Malaysia. The key thing here is that healthcare is an essential and people need medical care, no matter what's happening with the economy. And since these properties are leased to top-tier healthcare operator, Parkway Life REITs benefit from stable, long-term rental income. Now let's talk about the dividend yield, which is one of the reasons why many investors love Parkway Life REITs. As of April 2025, Parkway Life REITs has a dividend of around 4.5 to 5%. Now that's pretty attractive for investors looking for regular income, especially when you compare it to other stocks in the market. This means that for every $100 you invest in Parkway Life REITs, you could earn $4.50 to $5 in annual dividend. Pretty good, right? The beauty of REITs is that they are required by law to distribute at least 90% of their income as dividend. So you know that these payouts are fairly consistent. And since Parkway Life REITs has a strong portfolio in the healthcare sector, which tends to be more stable than other industrial, they have managed to deliver these attractive yields even though tougher market conditions. Plus, with the aging population across Asia, healthcare demand is expected to grow, which means Parkway Life REITs is well positioned for long-term growth. Not only are you getting reliable dividends, but the underlying property have solid growth potential, making it a great combination of income and capital appreciation. So there you have it, my top stock to buy in Singapore for April 2025. Number 1, DBS Bank for stability and dividends. Number 2, Parkway Life REITs for reliable income. Number 3, Mapletree Industrial Trust for a solid mix of income and exposure to tech. Whether you are looking to build a dividend portfolio or tap into high growth sector, this pick offer a great balance of stability and growth potential. But now I want to hear from you. Which stock are you most interested in this month? Or maybe you have got a hidden gem you think should have made the list? Let me know in the comment section below. I would love to hear your thoughts. If you enjoyed this video, don't forget to like, subscribe, and hit that notification bell so you won't miss out on my latest pick and insight. Thanks for watching, and I'll catch you in the next one. Until next time, trade smart and stay profitable.